Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, first of all, Happy New Month to you guys. I'm very grateful for life and, of course, thankful to be with you here this morning as we are going to be starting the new month on a fresh new note. And secondly, I would like to appreciate your patience in the last 30 minutes or so. I was thinking that I will be using about 20 minutes before I get myself prepared, but unfortunately, time went by so fast, and in fact, I wasn't able to do what I wanted to do within the specified time. So I'm still going through my medications, and in fact, the doctor just left my place now. So but I thank God I'm feeling better now. I'm feeling better now. And I hope you all had a wonderful day yesterday and hope you follow the market through with the instruction I did share on my public platforms during the course of yesterday's trading session. I see your comment, Jonah Aruna. Thank you very much. I really appreciate the positive energies. And for those of you who sent me messages behind the scenes, I really do appreciate your candid support and positive energy towards me. Thank you very much. I really do appreciate that. Okay, so with that being said, we will be starting the new month, of course, on the Forex Money Mastery, your daily dose of financial insight and trading strategies. My own name is Sheriff Daramola, and for the next 30 minutes thereabout, I'm going to be your host as I will be taking you on a trading journey where we will be evaluating the financial market from a technical standpoint using our basic tools such as trend lines, key levels, and of course chart patterns to unravel the potential trajectory of price action today. Well, for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as to how we will be going on for today. But we will be doing some expansion on that one to see how we intend to position ourselves for the next move. With that being said, for those of you who are actually joining us for the first time, you're highly welcome on board, and I'm very excited to have you around. I'm always excited to have newcomers in the house. And one thing, I know you will be wondering what this is all about and what is it that we are doing here on the Forex Money Mastery. Well, it's important to note that I usually share a couple of videos during the course of the weekend which emphasize my plans and analysis ahead of every week. And based on these videos, the Forex Money Mastery was born where we have an avenue where we come together on a daily basis to follow up on our on this asset for the week. So as technical traders, we usually gather here every day, coming together to review and of course do follow up details in preparation of both the London and the New York session. The session officially kickstarts 9:05 a.m. West African time, 8:05 a.m. UTC, except for today, which we started very late due to obvious reasons I mentioned earlier. So I recommend you newcomers to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And it's also important for you to note that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather on this platform to enhance your own trading decisions and strategies. So, once again, I welcome you on board and encourage you to actively engage in the comment section. So, with that being said, we will be diving right into the business. And of course, the first thing we usually do in this community is to keep tabs with the fundamental factors that will be affecting the market sentiment today. And we all know how important these fundamental how these fundamental factors often manifest on the chart in technical patterns and price movements. Now, by monitoring the economic calendar, we tend to pinpoint or identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, of course, better timing to position ourselves in such a way that we can capitalize on the next potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring since the beginning of this week, we have been focusing on economic features from both the United States and the Japanese economic docket. Though our center of focus is around the high impactful event, but whenever we have a day which is absence of any high impactful event, we usually include the mid-tier economic features just to have a perspective into what majority in the market will be looking forward to, and of course help us in better timing ourselves for the next move that may happen prior, during, and even after this economic event. Well, so far this week we've had some series of very important economic events around both the high impactful and of course the mid-tier one. So I would like to recalibrate my economic calendar right now to include the mid-tier economic features so that we can have a broader view of what to expect for today. So since the beginning of the week, we've had very important event from the Japanese economy. We had the unemployment rate, which of course came out phenomenally well, giving us some positive light to the economy of the the labor sector of the Japanese economy. Then we also had some other important event on Tuesday too, which is the housing pricing index, which came in just as the previous month. We also had the JOLTS job opening, which of course also came in very good. Then we had the retail trade for the Japanese economic docket on Tuesday, which of course came in below expectations on that one. Then yesterday was one of the major days that everyone in the market were looking forward to, and a day which comprises of key events such as the Fed monetary policy statement, the Fed interest rate decision, and of course the FOMC press conference. Then we also had the ADP employment change yesterday too, which didn't do very well at all as it came in below expectation, had a 107,000 against the previous data of 158,000. So we had and yesterday we had the interest rate decision, which of course came in just as expected, as we saw the interest rate was left unchanged yesterday. And we also had some comments from the Federal Reserve Chairman Jerome Powell yesterday when he had the press conference, where, though I do not have a detailed highlight of what really happened during the course of the session because of my health situation, I wasn't able to follow through with that particular session, but I was able to capture some summary of what really happened yesterday. But I will do some detail into that today, and of course probably give you some update during tomorrow's session. But one thing I was able to come up with based on what he said yesterday was that it is not likely that we will be having an interest rate cut as early as the month of March anymore. And remember last year, the Fed Reserve policymakers and press and chairman were emphasizing that due to the inflation rate dropping based on the monetary policies they have adopted over the years, that it is very likely that they start cutting interest rates as early as the month of March this year. But from what he said yesterday, that has been thrown out of the table right now. And one thing he also mentioned is that inflation is very, very high, and that it is possible that there's likely going to be more rate hike this year. Now, what does this mean? It means that if there's going to be a rate hike, then definitely investors will want to put their funds in the dollar because of the high return in yield. Because if the interest rate is higher, when you invest in this asset, you definitely get more return on that particular asset. So for me, this is an hawkish statement, and it's likely going to be inciting some positive traction in favor of the US dollar. But since the speech happened yesterday, though we've seen some choppy scenarios in the market, inciting some indecision going on as market participants digest whatever is said yesterday. Now, today we have some couple of other events that everyone will be looking forward to gain fresh impetus into the US dollar asset. So for today, Thursday, the first day of the month of February, we have a couple of impactful events for today, but I will be taking on the most important one on the list here, which is the ISM services, ISM, what's it called again? ISM manufacturing. Excuse me, please. So we have the ISM manufacturing PMI, and for those of you who do not know what this is a key economic indicator that measures the performance of the manufacturing sector in the United States. And of course, this data here is considered as a sensitive data, is considered sensitive due to its impact to the US economy. The manufacturing sector is considered as a very, very very influential sector in that economy, and whatever this says will give us an insight into how well the US economy is. And of course, there is a gauge, or it's a reading to it between 0 to 100, and anything above 50 indicates an expansion and can positively impact market sentiment, reflecting a healthy and growing manufacturing sector. However, if we have anything below 50, it's considered as a contracting sector. Now, if we look at the previous data here for the month of December, it came in at 45.2, which is quite below the 50 gauge, which is considered as something positive. And we have consensus based on what is on ground right now, projecting that we will be having a 46.9. So it's a little bit higher than the previous month, which for me is a positive sign, though it's not up to the 50 mark. But for the fact that it's higher than the previous month, it gives us a sign that that sector is expanding. So we look forward to see what the actual data is going to be like for today, to give us a fresh impetus into what we will be looking out for today. Then another one that we're also going to be looking forward to today, which has already started already, that is the OPEC Plus meeting. I did mention this at the beginning of the week, that the OPEC Plus meeting is coming up on the 1st of February, and market participants, especially the oil market, have been anticipating this event, and whatever happens today is likely going to be affecting the market sentiment. So I'm yet to have an hint into what is going on so far, but I'm very hopeful that by the end of today we should be able to have something tangible to work with ahead of this new month. So with all this information we have gathered here from the economic calendar, let's scale into the chart and see things from a technical standpoint. And one important thing I would like to say before we go into the chart is that as technical traders, we do understand that these economic features, the anticipation of these economic features, usually affect or influence the market sentiment, which we shall obviously see reflect on the chart as price action. So talking about price action, we shall scale into our first asset for today, which of course I had to open this one down so that it will not delay us. So we have the USOILSPOT. Now on the USOILSPOT, we've had quite an interesting situation going on in this market since the beginning of the week. Remember, we have been selling this asset since the beginning of the week. In fact, we had some significant amount of profits at the beginning of the week, scooping I think close to about 200 pips from multiple sell entries in this market. Now, for the sake of clarity and for the sake of those who are not part of our earlier sessions, let's quickly run through how the week began for us and what led to the situation where we were considering selling this asset. So zooming into the beginning of the week, remember that we had our key level for this week situated at the $78 area. And you know how we use our key levels in this community. As long as price remains below the key level, we definitely want to be looking out for patterns and structures that supports the idea of selling that asset. Now, besides the key level here, we had a range identified right above the key level where price action for the first 8 hours of the week was more or less confined within the $78.50 level and the $78 area to further emphasize the prevailing indecisive situation in the market at that particular point in time. And you know how we do it in this community. Whenever we have a range identified on our market structure, we exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line of the range to give us an opportunity to sell. And in fact, the latter was what happened here, as we saw price break down the support line and giving us our first sell position for the week, as we got price triggered below our key level right here. And of course, we had multiple entries. Remember, we marked out multiple levels like the $77.40 area where we said we shall be adding more sell positions to our existing trade. So we rode that momentum all the way down, added more sell positions below the $76.73 level, riding that move all the way into the $76 area before buy pressure resumed again. Now, during the course of the week, I think on Tuesday, we begin to notice that buying pressure was evident around that $76.73 area, where we decided that we will be, and considering the fact that price was sitting above that ascending trend line. Now, please let me quickly state this, especially for those of us who are joining us for the first time. Now, we usually do a top-down analysis on this asset during the course of the weekend or probably on Monday, depending on which asset we are talking about. And if you in any way missed out on that top-down analysis, please check the link right in the description box of this video so you can have a better background knowledge into how we got to this point you are seeing here on the 1 hour time frame. So during the Forex Morning Mastery, we only focus on the 1 hour time frame, which happens to be our execution time frame. So please, if you missed out on how we got to identify the key levels and the other structures here, please check the link in the description box below to feed yourself with a background knowledge into the structure. So we saw price trading above our ascending trend line, so we anticipated buying opportunities on Tuesday, and of course we saw price break out the $77.15 area, rise into that key level one more time, and we saw rejection again, pushing price to the downside. And in fact, you know when a price action remains below our key level, it makes quite a lot of sense for us to maintain bearish bias unless something significant comes up on the chart that states otherwise. And for the fact that price action still remains below this key level, it makes quite a lot of sense for us to continue to look out for selling opportunities. Now, on Tuesday, we had the release from the API, which of course influenced the nature of price action on that day. As we saw, though price was the stockpile came in at above expectation, which of course influenced the selling expectations here. Then another thing that also affected the bearish momentum in this market was as a result of a couple of various factors, which I did explain during my commentary this morning on this particular asset. One of which is the disappointing China's manufacturing PMI data, which came in yesterday at 49.2 for the month of January, which was below the prior figure of 49.0, giving us a sign that the economy is still struggling to gain momentum. And of course, we also had a surprise build in US weekly crude oil inventory, as recorded by the Energy Information Administration from the United States, reporting a 1.2 million barrels increase for the week ending January 29. Now, one thing this means is that when there is a high stockpile in crude oil, it shows that there is not enough demand to affect the stockpile. And when there is not enough demand, what this simply means is that there is more supply than the demand. And when there is high supply, when there is a lot of the commodity in the market, what happens? Price tends to fall. And due to these reasons, due to these obvious reasons and simple economics, it's quite clear why price is dropping to the downside since the beginning of the week, and despite the geopolitical tensions in the Middle East. Now, as everyone gets prepared for today's trading session, market participants will look forward to the Chinese Caixin manufacturing PMI data, which is coming up later today, and of course the initial jobless claim from the United States and the ISM manufacturing PMI, all of which are very important events that will may likely or potentially affect the oil prices for today. So I'm very certain that this, whatever happens today in price, will be attributed to the data that comes in today. So while we anticipate this event, let's look at things from a technical standpoint and how we intend to position ourselves for the next move. Now, while I was dissecting this chart this morning, looking into the structure, despite the strong bearish momentum in this market, we can see, let me show you something here. So the first bearish momentum we saw at the beginning of the week, which we took advantage of, started here below the $78 level, dropped into the $76 area before it climbed back up again into that our first entry zone. Then we saw again another one dropped, but now look at the second one that dropped here. As soon as price got into the $76 area, we have been noticing buy pressure resume from that area, giving us signs that sellers are finding it difficult to break through that particular zone. The same thing also happened here on Tuesday, as you will see here. And then during yesterday's trading session, during the later part of yesterday, though price action broke down that structure a little bit, but you will see that the momentum in the sellers reduced drastically as soon as price got into this area. We have been noticing buy pressure resume around that area. Now, what does this tell us? It simply tells us that buyers still have a say in this market, and of course the geopolitical tensions in the Middle East may be a deciding factor stabilizing the prices of oil, preventing it from dropping further to the downside. Now, if you now zoom into what has been happening here since the later part of the New York session, that's about 12 to 15 hours now, I was able to identify a temporary demand zone just right within the $75.80 level and the $75.40 area. As you will see, every attempt by the sellers to break through has always been met with strong resistance from the buyers at this point in time. And this is one of the reasons why I mentioned in my commentary this morning that we should move all our stop losses and secure this position, as we may likely see a strong momentum in favor of the buyers today. And in fact, if we take a closer look at the structure, you will begin to see price action gradually transitioning into a reversal setup in the form of a double bottom structure, which technically is considered as a strong reversal pattern. As you will see, price was unable to break down the previous low, giving us something that may look like a double bottom structure, though this is yet to be confirmed. And you know how we do it in this community. Whenever we have this kind of reversal setup identified on our chart, the next thing we want to be doing is to mark out the neckline that will need to be broken to validate the potency of this reversal pattern. So this morning I marked out this neckline here around the $76.35 level, where I will need price to break out of to give me that confidence to join an uptrend continuation. So as it is right now, I want to maintain a counter trend opportunity on this asset, looking out for buying opportunities above the $76.35 level. Price breaks out of the structure, we have a buy position triggered, and then if price continues to climb, we have multiple levels that we will be using to maximize the potential of this bullish move. So we have the $77.15 level, and of course the $78 area, which happens to be our key level for this week to capitalize on more buying opportunities in this market. Now, there is a caveat to this bullish setup which I would like to call our attention to, and that is this ascending trend line that was broken on Tuesday and on Wednesday. Remember, we had this ascending trend line broken for the first time in the last couple of weeks. We have this ascending trend line broken, and from a technical standpoint, when price breaks down a key trend line like this, we expect that at some point in time price may come back to retest the structure in anticipation of another wave of bearish momentum to the downside. So with this in mind, as soon as price gets into this trend line anywhere around the $77.60 and the $78 area, we should kindly move all our stop losses, secure the current buy position, and let's wait to see how the market is going to react to the zone. If we see that buyers are finding it difficult to break above the ascending trend line and our key level at the $78 area, and then we want to start considering selling with the emergence of any form of reversal pattern, maybe double top structure, head and shoulder pattern, or anything that incites a sign that buyers are losing the momentum there, mark out the neckline and then sell the breakdown of the neckline. However, if price action breaks out of the ascending trend line, right, and climbs up, breaking out of the key level 2 as well, then we will assume that price is back at the buyer's territory, and of course we'll look out for more opportunities to buy this position. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So at this juncture, considering the inability of sellers to break through the $75.80 area and the $75.40 level in the last 15 to 18 hours, for me is a good sign that buyers may want to be gaining some momentum here. So let's position ourselves just right above the $76.35 area to capitalize on the uptrend move. So that is what I'm looking out for today. However, in as much as we're looking out for buying opportunities here, you know how we do it in this community. We also want to keep tabs with the opposite direction if that will happen too. Now, what is it that will make us change our bias from bullish to bearish at this juncture? Well, I would only consider selling at this juncture if price action will take out all the buy positions around the $75.40 level. That is, break down and retest that structure with a good confirmation, like a retest before joining the bearish move to the downside. But if this does not happen, we maintain a bullish bias at this point in time. But if there's anything new that happens, I will definitely let you know in the comment section of both my TradingView and Telegram platform. So this is my simple view on this asset for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will take the next 5 to 10 seconds off to see if there are any questions, after which we will be moving on to the next asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving on to the next asset on our watch list. The US All Spot just got triggered, buy position just got triggered above the $76.35 level. Let's see how far this momentum is going to go. So with that being said, we shall be moving on to the next asset. So the next asset on our watch list for today is the USDJPY. This asset has been a little bit choppy in the last couple of days due to the anticipation of the FOMC minute and of course the Fed chairman's speech. And let's see what has been going on since the beginning of the week. Now the week started with a consolidation phase between the 148.300, as you will see right here, and the 148.00 area, giving us an indecisive phase at the beginning. And then you know how we use our ranges. Whenever we identify them, we exercise patience, waiting for either the breakout of the range to happen, giving us buying opportunities, or the breakdown of the range to give us selling opportunities. And of course, what happened here was very, very simple. Price broke down the support line, and if you had missed out on that opportunity, we saw the market come back, retest the structure, and since that moment we have been selling this particular asset. Right on Tuesday's trading session, we did emphasize that we move all stop losses to secure the position, and then we also decided to use the trend line, which has been supporting that bearish momentum since the beginning of the week, to guide our trading decision. And you know how we use our trend lines in this community. When we have a descending trend line, we want to continue selling as long as price action remains below the descending trend line. And if price breaks out of the descending trend line, we definitely want to be looking out for buying opportunities. Now we saw what happened here on Tuesday during the later part of the New York session, and I did update us that we will be looking out for buying opportunity as we saw this engulfing bullish candle breaking out of that descending trend line, triggering the idea of considering buying this asset. Now, as soon as price came back to retest the trend line, as you see here, we positioned ourselves at this level. We did identify a level around the 147.500 to capitalize on that uptrend move. But as you see, the traction did not really gain that significant move, as we saw one of our buy position went into a loss here, while the first one went into a worst case scenario break even. Now during our during my update yesterday on the USDJPY, my commentary on both my TradingView and Telegram platform, I mentioned that we will maintain a bullish bias on as long as price remains above the ascending trend, the descending trend line, sorry. And that the only condition that will make us sell the USDJPY is for price to drop below the descending trend line. And of course, I can remember identifying this level at the 147.200 area. Having a sell stop order below that structure makes quite a lot of sense to join a bearish move to the downside. And of course, we saw what happened here yesterday following the I think a couple of hours into the New York session, about 3-4 hours into the New York session, we saw the significant move characterized by this engulfing bearish candle moving over 100 pips in profit. And of course, we had another level at the 146.700, having a sell stop order below that structure, and that one also moved about 58 pips thereabout before this bullish momentum came in again. Now, as it is right now, you should be out of all positions, as all, if you had moved your stop losses accordingly, definitely you must have been taken out of all positions. Now, as we prepare for today's trading session, how do we intend to capitalize on the next move? Well, this market has we have a lot of factors here that is affecting this asset. Well, one of which is the soft domestic data, which is weighing in on the Japanese yen. coupled with a moderate uptick in demand for the US dollar, affecting the positive traction which was expected on the Japanese yen following the hawkish comment from the Bank of Japan's governor last week. Now, amidst this bullish run for the US dollar, backed by the Federal Reserve's less dovish outlook expressed yesterday, what are the chances that the yen may gain traction, or what are the chances that the dollar will continue to the upside? Well, the recent conflict in the Middle East, with the potential for a wider war, and China's economic challenges still contributes to a supportive backdrop for the yen at this point. So there's still a level of hope for the yen. So we shouldn't ignore the chances that sellers could come in at this point in time. Very, very important. Now, we also remember the Bank of Japan's governor's his speech last week, which emphasized the possibility of pivoting from the current ultra loose monetary policy as early as the month of March, which is something positive for buyers of the Japanese yen. Now, these two factors here for me is still a glimmer of hope for the buyers of the Japanese yen, which of course I don't want us to ignore at all. But we cannot overemphasize the strength of the dollar at this point in time. The dollar is at a very strong territory. If you look at the US dollar index at the moment, it's very, very strong. So we are within a limbo right now in making an informed trading decision. But as it is right now, in the last in the last 24 hours, price action has been confined within a range, which for me emphasized the prevailing uncertainty in this market. You can see price has been caught within a range in the last 24 hours right here. And whenever we have this, you know that we need to exercise patience and look for significant confirmation before we can jump into either buying or selling this asset. Now, today, market participant will be looking forward to the ISM manufacturing PMI from the United States for potential short-term trading opportunities. And with that in mind, how do we intend to position ourselves for the next move, looking at things from a technical standpoint? Well, if we look at the structure closely, you will see that since price tested the 146.150 area, this is the lowest point price action has been since the beginning of this week. We saw buy pressure resume around that area, and since then price action has been finding higher lows, giving us a temporary bullish trend line in the meantime, as you will see right here. For those of you who saw my updates this morning, you will see this the ascending trend line, which for me is going to be playing a major role in guiding our trading decisions for today. So if price action continues to stay above this ascending trend line, leading to the breakout of this descending trend line, then we shall feel confident buying the USDJPY. But I had put my level for buying opportunity around above the 147.200, so I do have a buy stop order sitting above the 147.200. Now, however, if price breaks out of this structure and does not get to the 147.200, comes back to retest the descending trend line and the 146.700, well, the emergence of buy pressure here will make me buy earlier than expected. Then the buy stop order above the 147.200 gets triggered as price action continues to climb, hereby making me to maximize the potential of the bullish move. So this is how I'm going to be buying this asset today, though we have a buy stop order here. So let's see if a breakout retest will happen. If it happens, we join early, that before the breakout of the 147.200 happens. Now, if sellers decide to dictate the pace today, then I would like to see price drop below the lowest point for this week, which is the 146.150. If price can break below the structure, well, this is a good signal that price will take out all the buy positions there, giving us the confirmations to join a decline to the downside. So this is my simple view on the USDJPY for today. If there's any significant updates, I will definitely let you know in the comment section of both my TradingView and Telegram platforms today. So if you have any questions, feel free to let me know. I want to be taking a break this time around because I'm already running out of time. And if you have questions, please drop them in the comment section. I will be checking the comment section from time to time. So I will be moving right into the final asset for today, which of course is my favorite, and that is the XAUUSD, popularly known as the gold spot. And on the XAUUSD so far this week, we remember we have been buying since the week began. We had some privilege of buying the XAUUSD after price action. Where does this keep? Okay, so we had a range here at the beginning of the week between the $2028.50 and the $2019.20 area. And of course, you know how we use our range. Whenever price falls into a range like this, we wait for either price to break down the support line, giving us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And at no point in time did we see price even come close to the support line of that range, hereby negating any negating even considering selling this asset. But instead, price broke out of the resistance line at the $2028.50 level. Then there was another factor here that we also considered. Remember, we identified a descending trend line on our higher time frame. You see, this descending trend line here has been supporting the bearish momentum since the beginning of this year. Remember, I did mention that this year started with a profit-taking activities as market participants who had capitalized on the uptrend move on the gold right into the end of last year. When the new year began, they began to take some profit off the chart, which reflected on the chart as a series of lower highs, giving us this beautiful descending trend line to guide our trading activity. And since the beginning of the year, this trend line has not been broken to the upside, and not until the beginning of the week that we saw price break out of that trend line. So I did mention here on Monday that we might see price action come back to retest the descending trend line, as you will see here, to incite another wave of bullish momentum. And that was exactly what happened. And to help us to be able to capitalize on that opportunity, I did mark out the $2024 area, which we said we will be using to capitalize on the uptrend move. And as soon as price action got into that confluence, we saw buy pressure resume, and that began our buying opportunities since the beginning of the week. So we kept on buying, though we were stopped out at some point after the strong bearish momentum to the downside. We did gain some significant profit on that particular one. Then on Tuesday, we had a sell position which did not gain any traction at all, giving us our first stop loss for the week. And then yesterday on what's it called, on Wednesday, yesterday was Wednesday, right? Okay, so yesterday I gave an update in the morning, though it came in very late, but I think it was early enough for us to be able to capitalize on this opportunity. And one of the things I mentioned in my commentary this on Wednesday, on yesterday morning, was that we will be using this ascending trend line to guide our trading activity, and that as long as price remains above the ascending trend line, we shall continue to maintain the bullish idea. And in that regard, we positioned ourselves above the $2040 level, as you will see right here, to capitalize on the uptrend move. Then we kept on adding more positions, had the breakout of the $2047 area. And when I gave an update during the later part of yesterday, I was saying that we will be adding more position at the breakout of the $2052.50 level, which of course never happened, as we saw price drop to the downside. And of course, if you had moved your stop losses accordingly, you must have been taken out of that position with a reasonable amount of profit at this point. Now, as it is right now, I currently have a buy position running, which of course prices back into the entry point, and the fact that price still remains above that ascending trend line makes quite a lot of sense for us to continue to maintain a bullish bias in this market. Now, if you look at the structure, this trend line here is going to be playing a major role in guiding our trading decision. So if you had missed out on this opportunity, price is back into the 2040. So we're still going to hold on to the bullish bias as long as price remains above the 2040 and of course the ascending trend line. And if it goes ahead to break out of the 2047, we had more buy positions to our existing trade, and then had more positions again if price action goes ahead to break out of the $2,052.50 level. So for the XAUUSD today, I still hold on to a bullish bias as long as price still remains above the structures. Now, another thing I would like to emphasize here is the strength of the US dollar, and this factor here could potentially cap the current uptrend on the XAUUSD. And additionally, the positive sentiment in the US equity markets will also be affecting any upside situation here. So this is what we want to take into consideration too as well, and which of course opens up the idea of the potential of sellers taking over this market too. Now, if sellers are going to be taking over this market, what are the chances? What are the things we want to see on this chart that will make us feel confident joining a bearish momentum to the downside? Well, first of all, I would like to see price break down the ascending trend line, which will be the first sign for me to start considering selling. Then I would like to see price take out the 2035 area. In fact, this is the most important level for me to consider selling this asset. So if I can see a breakdown retest of the 2035, then I want to see an opportunity to sell this asset today. So I wouldn't be considering selling unless this $2,035 level happens today. And if you are going to be with us on the XAUUSD live window, I already dropped the link to the XAUUSD live window right in the comment section of this video. It's pinned at the top, where we shall be monitoring real-time price action together during the New York session. You will have the privilege of seeing how we will be managing our positions on this particular asset. So I look forward to seeing you guys in the comment section of the XAUUSD live window. So a quick recap on this one. We maintain a bullish bias. I have a buy position triggered above the 2040, looking out for more opportunities above the 2047 and maximize more at the breakout of the 2052. But if the strength of the US equity market affects this asset today and leads into strong traction in favor of the US dollar, like I said, I want to be only selling at the breakdown retest of the $2,035 area. So I do encourage us all to mark out these levels on our chart, as we will be needing them to guide our independent trading decisions for today. And it's on this note I want to be rounding off on today's Forex Morning Mastery. It has been a wonderful moment with you guys, and let's see if there are any questions. Let me take some 5 seconds off. Let's see if there are any questions, and if there are not, let's round off on today. And please, I really appreciate your support. Give the video a thumbs up. Your likes are very, very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders. Thank you very much as you do so, guys. I really do appreciate it. So let's see if there are any questions, and if there are none, we just go ahead to round off on today's Forex Morning Mastery. Alright, so in the absence of no questions, I want to assume that we are all on the same page, And in that regard, we have come to the end of the Forex Money Mastery session. And in fact, it has been a good day. It has been a wonderful moment with you guys. And let's hope that the new month starts on a very positive note for us all as we venture into both the London and New York session today. So during the course of the session, we were able to attend to all the three assets on our watch list for this week, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD, where we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and of course chart patterns to strategically position ourselves for the next move. And I do hope that you knocked out these levels as illustrated during the course of the session. If you had done that, well done to you. So what we just need to do is exercise patience and allow the structures to mature before jumping into any positions. And remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding, let's ensure that we have a well-defined risk management strategy in place so that we can mitigate against any risk that could come up from sudden pullback from the directions we have taken a position on. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. If you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information you gather here to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 9:05 a.m. UTC, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing so far, and of course prepare ourselves for tomorrow's trading session, which promises to be another exciting one as we gradually approach the end of the new week. And of course, market participants will be rounding off for tomorrow's rounding off for the weekend. So on this note, I want to wish us all the best of luck, and looking forward to seeing you all in the comment section of the XAUUSD live window during the New York session today. So on this note, I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.